Hey guys, this is Reggie, and I just want to do a quick video on a trade, a one-day trade, a quick swing trade. I've been combing my scanners all day, and I finally picked one, and I based this pick off of the candlestick pattern. So this one is called a morning star. I found two, as you can see here on my screen. And this one, NEM, is one I like. They're a gold miner, and there's a lot of gold miners right now showing the same pattern. What I like about it, so the pattern I looked for was a morning star candlestick. And you see where my cursor is? That's the morning star candlestick. Looks like a cross. And so the scanner is a bit behind because this is a daily chart. So when you see this, this is usually a reversal pattern. And as you can see, it gapped up here. And then this is today, right? So you think like, well, why buy it? It's a red candle. I bought it because it's in the it broke past the red line on the Bollinger Band here. So typically, when I'm and also it's according to my SAR indicator, these dots it's showing the beginning of an uptrend. And here, as you see these lines here, this is volume. It showed great volume, and this is today. It looks low, but the day isn't over with. But it's still going to end up with a low volume day. I think people are doing a wait and see approach because see, as you notice, the high volume was most likely because of this. In other technical analysis buyers, they saw this candlestick and jumped on it, and so and some waited for confirmation on the next day, jumped on it, and now they're waiting. Right, they're not going to take profit yet. The reason why I believe they're waiting is because on this candlestick, typically what happens is it breaks past this center line of the Bollinger Band, and there's a little selling, but it gaps down. As you can see, let me zoom in a little bit more. As you can see, it gapped down and I had a false negative breakout past the band and came back up, right? And let's go to the 4 hour chart. That's a one day chart. Oops, that's 45 minutes. And what I'm liking about the 4 hour chart here, it's showing a bull flag, right? Um, resistance, kind of undecisive. Yes, it can easily come back down here to the $59 mark, 59.71. But it does need some volume to do so. So this is a bit risky, a bit speculative. But at the end of the day, that's all you can do, right? Because none of us have the right to choose to tell the market which way it should go. All we can do is make a hypothesis. Um, so here we have so the play I made on this, I've already bought it. So I'll show you guys right here. So I purchased a uh, straddle where I bought a put option and a call option, right? So I'm bearish on the move, but I want insurance, right? I don't like taking risks. Nobody likes taking risks. And so using the options profit calculator here, let me show you what the move looks like. So, and again, this option profit calculator will give you an idea, but it's not to the penny, right? So I bought a $62 strike price call, and a $59 put. The reason why I did that was I'm thinking tomorrow. So, and this is just a one day play. I mean, you could go long on this too, but it's a one day play for me. And I'm thinking it should hopefully, on a great thing, will do a gap all up to matching this candlestick here, gap up to $64. Worst case scenario, if we have no volume, it may gap up to 62. But if you look here on the profit calculator, so I'm risking $97. In actuality, it costs me a little bit more when we do an actual trade, but it cost me $97. And if it goes up to, what did I say, 62.38. So if it goes up to 62.38 tomorrow, I've made $3. Not good, but it's better than losing money, right? So that's if I give up on the trade, right? If it gaps up to where I would like it to go, which would be $64, and this is net. I've made $117 net. I've doubled my money on the trade. And if I'm still feeling good about it, if I want to extend it out a little bit more, I did the December 11th expiration date. So if I'm feeling a little, I could take a. So you look here at this. You look at my cursor. Let's say it goes up to $64, and I think it may move up more. And let's say I think, okay, because look, extra 33 cents. If I wait another day, I can make an extra $20, right? Almost. Um, or if it doesn't move at all, I can lose $10. So you're talking about a few dollars in which you're already up. So you can take a little bit more risk. But if it goes down on you, if it goes against you, and if you look at my insurance, this is what my insurance did for me. See the red is losing money, obviously, right? The negative. So if I, um, thanks to my insurance, if the trade goes against me, and hopefully it goes against me big, you want to go against you big. That sounds weird, right? If the stock goes down and you want it to go up, you want it to go down big. That's weird, right? That sound weird? Well, because I have insurance, and that's when my insurance will kick in. So, like tomorrow, if it goes down on me, I want to hit at least go negative $59 or more. And let's look at the technical analysis. For it to go down $59, I'm hoping it will go down to this support. The support is 59.42. So let's say it hits 59.42. Okay, $4, right? And I would probably sell here if it goes down because I'm not going to risk thinking, oh, it'll go up the next day. Because guess what? Look at your chart. If it go, let's say it hits 59.33, I'm up $4. I took a chance. I didn't. Basically, I made no money. Right? Made $4, but technically, I made no money, which is great. I need to make no money or make some money, but uh, rule one by Warren Buffett: never lose money. Right? But if you try to risk it and you say, okay, well, maybe it'll go up the next day, it needs to go from 59 and shoot back up to 63. I'm not taking that risk if it moves against me because you only got a few days. We have till Friday to make for this move to work. So that's the nice thing about it. You want to buy insurance, right? Because let's go. So if you don't have insurance, if I had just bought just the $62 call. Oops. Wrong ticker symbol. Don't make that mistake. I've made that mistake too. I've done, in the wrong symbol in here and it didn't work out. NEM, right? Oh, NAM. I'm sorry. So if I just bought the $62 call, and actually now I think the price changed on the stock, but if I just bought the $62 call and it moves against me, you have no choice but to lose money. You see the difference here? If it goes against you, you will lose money, right? So you want to buy that insurance, and that insurance cost me. So here's the actual trade I made at the time. That insurance cost me $59 put, cost me $16, man. $16. You risk it. You're taking some of your profit. Hopefully, if it goes up, it cost me $16, $16 more dollars to buy insurance if it goes down, and hopefully it goes down big. So that insurance could be a waste too, because if it only goes down by $1 or two by Friday, yeah, I will lose my complete investment, right? But it's calculated risk, correct? Right. So the $62 call cost me $69.51, and so we're risking that to double our money. So I'm gonna give an update tomorrow on this trade, and keep an eye out on NEM. This is Reggie. We'll catch you on the next video.